Go. Welcome to Taking Stock. Sorry, working lunch. I forgot
taking
about
stock.
John,
I prefer taking stock.
Yeah, no, I know. John's been away. I can't believe that. Martin came in. He not only nicked your flat because he had the same view from behind you. I know your flat's very expensive because the view you've got of London is phenomenal. That's a penthouse flat. That's how well John is doing in stocks and shares. And but not only did Martin nick your flat for a couple of days, he would change the name as well. So
we're changing it back. We're changing it back.
In fact, that's one of the comments. By all means, comment below. If you want to, should it be working? I mean, I don't really care.
Taking stock. It's going back. It's going back.
Taking stock. It's going back. Okay. Then Martin goes back in working lunch. Okay. It's an awful day in the markets. Like I say, it's, what is it? 2nd of August, 2023. Awful day. And I'll just share sort of the indices with you. And of course, a bit of this is because of the Fitch downgrade of American debt. What they've done from AAA to AA or something like that. But look at the indices there. FTSE down 1.1%. The all share actually is faring the best, 0.64% there. But everything else is down. This is my thoughts, right, John? And I think we are at, they say it's always darkest before dawn. The hour is darkest before dawn. That's where we're at the moment. We've got this Fitch rating hanging over the markets, of course, making American debt a bit more expensive. And we've got the Bank of England tomorrow. But if you look at everything we've been, the figures coming out, it's all good. It's all pretty much good. And I don't mean good as in good, as in very good. I mean, it's not getting worse. And that's what we're looking at. And I've said that on Twitter.
Yeah.
On Twitter. Let me just say on Twitter, by the way, go on Twitter, Box Podcast there, and you can vote on a survey. But these are the things we've seen in the last few days, right? That will be good for the Bank of England. House prices coming down, biggest drop in sort of annual pace in 14 years. Food price inflation coming down. UK factory output at the fastest pace in 7 months. Look at the PPI. There's a chart there in the PPI. Okay, look at that. That's the purchasing power.
Producer price inflation.
Index.
Yeah,
and that leaves everything else. So it's all sort of coming down.
It's screaming recession. I mean, it's screaming.
Yes,
that we're in for some tough economic times ahead, but I think you've mentioned before that, obviously the market and the economy don't move in lockstep. The market is looking sort of 6 to 12 months out, and actually arguably longer. So it's looking through this coming period of economic weakness that we've anticipated for some time. I looked at one of the house builders today.
Look at that.
The article. Yeah, well, maybe now because. In the context of falling house prices, it's quite an interesting update from Taylor Wimpey.
Yeah. And in fact, let me just share that screen with you because if you scroll down, and I've got where is it? By all means, put comments. By the way, if you want to get this, live to inbox when we go live, hit the subscribe button, and you will get notified. But these are basically some of the results from Taylor Wimpey. And if you look at the top line there,
horrible.
What is it? Yeah,
well, it's down more than a fifth. Operating profit down nearly halved. If you look into the statement, you're seeing higher cancellation rates. I think they're at about 24% now versus 19% a year ago. They talk of planning difficulties, which we know about. So these are not nice numbers. On almost every metric, they're looking worse. The only metrics I look at and think, okay, things are on an even keel is that, they are battening down the hatches. They are managing this business for tough times in the coming months, in the coming year. They're not investing heavily in land, which meant that cash, remains strong. This is good for shareholders, obviously, because, they'll get some of that back in terms of dividends. It's just really, really, really quite tough for this industry. But as you say, darkest before dawn. There was another update from a company called Ibstock, which makes bricks. And again, you look at their figures. Again, a real slide at the top line. Profit before tax down, although some of that is exceptional costs related. About 11 million of the drop is related to exceptional costs due to closing a plant. But that too is due to the fact that they anticipate the need for less capacity in the year ahead. So really tough for the house building sector. They are definitely in survival mode, but they're really cheap. So, as I said in my piece, if you go on the site and have a look at it, if you've got the stomach for, navigating tough times and if you are looking to the long term, the valuation of these businesses, is very cheap. Taylor Wimpey's below book value, like many of the house builders, and so obviously, we look at PEs, that sort of thing for operational business like Ibstock. They're sort of 13 times, not expensive at all. And when demand comes back, they'll be in pole position, and demand will come back. We need more houses. It is that simple.
Yeah. Well, it is, but I don't think they're Taylor Wimpey. I mean, they're good business. They pay good dividend, of course. I mean, they got no debt. But if we look at that, this is uncanny, right? Operating profit, and you see revenue's gone up because, of course, cost of houses went up. But operating profit down 44.5%. In fact, this is spot on. 42.7% pre-tax profit down. Look at the chart. From the high there to the low, 40% down.
There you go.
So pretty much it's priced in. This kind of thing is priced in. If you go back, we are now at 2014 levels on Taylor Wimpey. So we said, okay, well, go back to this level. That's 2014.
Yeah.
So I think if you're going to take a position, you don't wait until the figures start getting better. Because once the outlook starts getting better, it'll be rallying by then.
Well, it's rallying already. I mean, they're up 5% today on what is a pretty horrid statement. Actually, there was another bit of good news in that statement. And it ties in with what you started the show with, which is that their build cost inflation is moderating. Which is good news. And their prices are proving pretty resilient. So they've actually seen some price growth in what they're selling, which is contrary to what you're seeing in sort of the rest of the market. So there's some tantalizing signs of hope in those statements.
Just had a quick comment. By all means, comment below. Polarean Imaging. Someone said, "Is it all over for Polarean?" No, it's not over. But I don't know what's happening here. You got to listen. This is a company with groundbreaking technology, and just goes to show how hard the markets are. Even when you get the rubber stamp of approval, you find adoption of a new technology doesn't happen everyone's not knocking at the door like crazy for it, because there's legacy issues. People who use legacy systems, they used to, and all that stuff, and getting into the big players. Well, they are into the big players. I mean, Philips, one of the biggest MRI scanners around, have adopted their technology, but there's something going on here. I don't know why it's gapped down like this today. It's down like 17%. And part of me, either a big seller, or part of me thinks, is there a placing coming? Sometimes you get that when you get volume up. It is a horrible day all around. So,
the question would obviously be, how much cash have they got? And
they had enough cash for like a year. I think it was mid 2024. So I don't think they need cash. But who knows? The new CEO came in. I don't know what's going on there. But
I mean, we've spoken about this before. But, there are lots of exciting new medical technologies out there, often being developed by smaller companies. Adoption is always the problem. There are certain industries like financial services or healthcare, which in many respects are quite slow to adopt new technologies. And it's why when we spoke about intelligent ultrasound the other day, why it's really exciting to see that clinicians are actually using the AI add-on. What they're selecting, paying to use it. So because that is the battle here, getting that adoption up before cash disappears. So an interesting article on BBC today. They're starting to use AI in breast cancer screening. Very very similarly to intelligent ultrasound. I think this is a real thing.
Yeah, sorry, I didn't have my mic plugged in just then. So as my sound quality got better all of a sudden. Hopefully
yes, it has. Yes, it has.
I don't know why I didn't that. How can I talk? Luckily, I've got AirPods in, so I think it picks up from the AirPods. So I do apologise. But front page of Vox here. We got Greenroc raises some money. I did say on Twitter earlier on, and I did say, the weather is right now. The weather's dreadful. Okay, we're going through change. We're going through almost spring is fighting with winter and summer, all that. So when you have that, you get really bad weather when you're going through the change of the seasons, and that happens to the markets. I believe the markets are fighting. Bull and bears are fighting right here. We're looking who's going to win out. I think the bull will win out, and I've seen a lot of nano micro caps on AIM rally very strongly, which they haven't done for months and months and months, and not just one or two of them, quite a few of them. And we did talk about yesterday. Looked at the AIM all share. Martin says it doesn't see an uptrend there. It won't be reflected in the AIM all share index because they're too small. I mean, there's some big companies on AIM. I'm talking about micro caps, nano caps. They are rallying, so that shows to me a bit of risk appetite is coming back. Liquidity is improving, and right here you're seeing a lot more companies now get fundraisers away. Now, it's not it's not happy for an investor if it's discounted, but I don't think it was much of a discount for Greenroc.
No, it was at yesterday's closing prices. So that's really impressive getting that away.
Yeah,
but this is a really impressive resource that they have here. So
yeah, and but the thing is, the placings weren't happening. The market froze for like 2 or 3 months. They are starting to happen now, so that's encouraging, because that's what the majority of companies come to aim for, is to raise money because they're new startup businesses, so that's a good sign. And you think?
Well, Greenroc got support from one of its existing shareholders, Alba Mineral Resources. I think they took a big chunk of it, 3 million shares, I think it was. But again, that's good. And we've spoken about this before, that, actually look through the shareholder register when you've got companies that are going to need a bit of cash in the future. Not emergency cash, which we've spoken about, but cash to keep developing whatever it is they're developing, whether it's products or mines or oil fields. But yeah, if there's a supportive shareholder on the register, that's generally, a sign that if they need a placing, then they're not going to struggle.
Yeah, exactly. It's good to see that market sort of free up a bit. Let's look at, in fact, front page. What else is on the front page there, John? Take us through that. Let me just share the screen there. Oh, there we are. John in a tie and shirt there for his
it's very unusual
article.
Very unusual,
but not for the live webinar.
Not for this.
No, Vast Resources actually one of the most read today. And they're talking about, in fact, I'll get the box up here for Vast, because this is a Q2 production report from Bait Supply. I had to ask Andrew, probably the CEO, how to pronounce that. Bait Supply, of course, copper concentrate. Now, if you look at this, but it literally the figures, if you look at inspection, they don't seem to get tons mined are greater. The produced copper concentrate produced is not. But if you look at June, like 55% of this production took place in June as a result of preparations made in April and May. So it seems like June is picking up, and also, the average concentrate grade is better. So it's going in the right direction there, I think, for Vast. But this was a chart.
Yeah, shares up it today. I'm not surprised, because that's a good update. That's a good project. That's a good result.
In fact,
well, they were up.
That's a heck of a chart there. I mean, you're fighting the trend for a long time, but it seems to have had some, rallies here breaking out, and you had some support. This was a level here that was quite worrying. This level of support. It broke out. There's a bit of support there. That broke down. Support there, but up then, and broke down again, which is like 0.3, and now it's down here. So as yet, still in a bit. It would be nice if it could break that, 0.38 level, get back above that, because at the moment it's treading water. I mean, let's be honest, it is against. I mean, in an up day, maybe this would have. Most of my stocks are down in the red today, just because that's the way the market is. People have this. We're still on the teaching between bull and bear, I think. And that's why people are still a bit risk averse. When people are full on, have not worrying about the markets, that's the top of the bull market. But if we are sort of towards the bottom of the bull market, so there's still a lot of people worrying, and they'll see a red day, their portfolio go down, they just sell. Sellers. Falling prices attract sellers. Full stop. And that's the way it is, isn't it? We need that. Sentiment to change a bit.
I mean, it's why I'm not 100% convinced. We are in risk on mode fully at the moment.
No, nowhere near. I don't think that's a good thing. I mean, people who take positions now in good companies that have been sold off on general negative sentiment, I think will do very well over the long term. Like I said, if you're nibbling away at very good companies like house builders, and you take your time, you don't go crazy on it, then over time I think you'll be rewarded, because we will go back to that level of like we are a nation of homeowners, or wannabe, and that's not going to slow down, is it? I mean, I don't know what it was, but Martin was saying, but we've never ever hit our annual house building targets in this country, have we ever?
No. We might have done under Harold Macmillan back in the certainly not for some time.
Yeah, exactly. Another most read is Bushveld Minerals. That's a horrific chart.
It's interesting. This. I mean, this metal, vanadium. We've spoken about it before, not in the context of Bushveld, but in the context of Infinity Energy Systems.
Yeah.
And I think vanadium is really interesting. So I think this company, I must admit, I haven't spent a lot of time looking at it for mainly for the reasons of that chart. But vanadium is super interesting. I mean, we basically, in the context of Invinity, what it's being used for is to build these big things called flow batteries, which we've spoken about before. They are a grid level battery storage technology, energy storage technology. And flow batteries are just much more efficient than lithium ion. I do believe that actually it could, vanadium, become the standard for grid level batteries. Which I think you've written and spoken about before, Justin, as well. So yeah, you would expect Bushveld to be benefiting from that trend. Maybe it's too early because it's relatively small scale, but definitely worth keeping an eye on it in the context of the solutions we need to create really large amounts of grid level storage.
Yeah, one of the reasons why it's most followed is if you look at how it performed between 2017 and 2018, 4,500% rise in the share price. That is phenomenal. So literally times anything by 400 times, whatever you put in your money, that's if you'd got at the bottom and risen to the top. And now we're back at those levels, back down to there. And so, it was a trek. I mean, I do think, once this turns around again, I'm not going to say go back to that, but it should do quite well. But like I said, it keeps breaking out, 200-day moving average and breaking down again. And it's literally, if you go for a break on this, I'd put a stop loss in because it has the ability to break back down. What's the market cap of this now? Let's look at BMN, because 29 million, down 11% today. Wow. So yeah, I mean, it has potential to go up. The problem was they got a new CEO and their fortune's gone. Production is up. Okay, the costs have improved; they've come down, but their guidance going forward has been revised. 3,700 metric tons of vanadium and 3,900, and previously it was at 4,200. So they've guided that down, and the costs have gone up a bit. So so that's why it's sitting a bit of a hammering. So I mean,
it's another good example. I mean, it is another good example. There's another lesson to be learned here, which is that even when you start hearing about exciting technologies like vanadium flow batteries, it doesn't necessarily follow that any company, in that space or mining vanadium or whatever it might be, will fly. It just doesn't happen like that. There's a lot that needs to happen between, there being a nice story and being able to benefit from commercially.
Yeah.
So yeah, I mean, I think we're just seeing that happen here. But long term, again, it is an interesting space.
Yeah, John, there's a question here from Phil saying, how long do we have to hold the house builders for before we get a return? The thing is,
you're going to get your dividend. You're going to get your dividend
yeah.
straight away. So
and also, if they're paying out like a 5% dividend, for example, Phil, what you want to hope is that it doesn't go, the share price doesn't go down, more than 5%, because then you're obviously losing money pretty much. But if you buy around at these levels, let's go back to Taylor Wimpey, for example, TW, I think, and Taylor Wimpey hasn't fallen as much as a Persimmon because it's a healthier company, pretty much, Taylor Wimpey. I said, if you can hope not to get a 5% drop there, in fact, there's some good support levels there, but who knows going forward. I think genuinely, if the Bank of England come out with what we expect tomorrow at 12 o'clock, which is a quarter, basis point rise, quarter percentage point, I think the markets could do very well, because that's them almost acknowledging we're at the end, or very close to the end of the rate hiking cycle, and they're seeing what we're seeing. They're acknowledging it. I don't think they'll stop or pause because people get carried away with that. I think they want to do what the market expects, not to rattle the markets. I think the chance of them going above that is non-existent. But I think if they do that tomorrow, this could rally. The house builders could rally, honestly, quite well if they just stick with forecasts of 25 basis points tomorrow. So
yeah. I mean, you've seen a nice rally since October anyway. I mean, it's not, that's a healthy return. I think I've spoken about this on various times with various people, including Paul Hill, when we've spoken at Vox. I thought a year ago, it was probably too early to really be calling a recovery here. But I mean, we're now getting to that point where you can see some light at the end of the tunnel. Whether that's from interest rates or just the way they're managing the business, and Taylor Wimpey today said that it remains committed to its dividend, paying out a certain portion of NAV.
John, do you know anything about fusion antibodies?
I do not, I'm afraid.
Yeah, fab. It's a tiny market cap, and we got FRC on the comments. Say he's he wants us to get stuck into this. And in fact, they have an integrated system called Optimal, which uses AI. Well, do you know what I'll do right now? I don't know if I do this, but I'll show you. I don't know if I do this. This is what the forecasts are for this company. So the growth is going down top line, the forecast, and it's come down a lot. And they raised some money, I suppose, but they're not going to be profitable. But they've raised some money. How long will the money last? I think that's what you want to hope that a rally happens before they run out of money, because they only raised, I believe, let's say, was it 1.2? I mean, FRC, you know more than me, but you came in yesterday. But results of placing subscription. So they raised 1.56 million there at 4 pence. Where are they now? 6.3 was it? Yeah. So they've got a bit of cash there. There's the 9th of May. How long will that last?
Yeah, I've never heard of this company, but Antibodies. I know another company that does that, Bioventex.
Again, look at the chart has come down a lot there from IPO'd around this level, sort of 83 pence, now 6 pence. So something's gone.
I'll take a look. I mean, as I'm interested in this space, I'm interested in the companies that are sort of doing the behind the scenes stuff to help, drug developers, with the, provided the picks and shovels which they use to create new medicines and do their research. And it sounds like it's in the same space. I'll take a look. It's not one I've seen before.
Yeah, I think you said pigs and shovels then. But,
pigs and shovels, picks and shovels.
Yeah. So you see most followed, Oxford Miners, One Disc of Destiny, Upland, it's sort of tasty. Oh, Taylor Wimpey's on there.
There you go.
You always get some of the biggest fallers on there as well. Deltex Medical. I mean, some of the rises, that's on no news, these, but so Blancco Technology is basically a takeover cash offer, recommended cash offer by Bidco, which is about 24% above the closing price for 79.
It's annoying. I was having a look at this one actually recently, because I think it's in an interesting space. It's data deletion. It's sort of corporate IT asset management support. But data deletion, when you send your laptop back, when you leave a company, they want to clean it up and get it out to someone else. So this is the kind of thing they do, and it's really important in this age of privacy and GDPR and all that sort of stuff. And I'd like to have a look at this one, and obviously someone else beat me to it. But again, it's sort of indicative of what we are seeing in the UK market, that good companies that have become too cheap will get bought.
Yeah, exactly.
It's that simple.
And that's quite a hot area, data, actually, because people are realizing data is now a currency, and because people are literally, trading off your data. They're selling your data pretty much. And it comes to a stage where I don't want my data shared around by certain people. So, companies especially. So if you're selling computers on, you've got to literally, raise that data. Is it at a level where the FBI couldn't get into it? That's what I want to know.
Well, that's why it's such a specialist thing. I mean, if you want to delete something off your hard drive, you basically need specialist tools to do it. You can empty your bin, but the memory of that data is still somewhere within your machine.
Yeah. Exactly.
So you need specialist tools and services that Blancco provides to get that deleted properly and permanently. But I mean, it's a good business, and somebody else obviously thinks so too.
It's gone now anyway.
It's gone.
Missed it. There's no news on tasting all that, but
Hochschild's interesting.
Oh yes,
Hochschild is very interesting.
So they've literally got do you know what? They've been around for years, haven't they? I remember reading about those. In fact, I read about those in Investors Chronicle years back. So so they've got was it Immaculada environmental permit approved by the Peruvian government, and so that's an additional 20 years there. They do what? So they are silver and gold, aren't they?
Silver and gold, precious metals. And we published. I think you may have spoken about it this week already, Justin. The big report that we've published on gold mining and gold miners.
Wow. Yes. So basically, why is it falling? Is that right? Why gold miners falling, but gold is up as well? Is that part of it as well?
Yeah. Because, so I think we know gold miners are falling because I mean, if you look at Hochschild's numbers, they've obviously had some production issues. And one of the problems that all miners, in fact, all businesses, but miners in particular, have faced, and someone replied on Twitter with this, but it's as we suspected, is that mining costs have gone up. They are energy intensive businesses. They require a lot of oil, a lot of electricity, and that's just got more expensive. So it's squeezed their cost base, or squeezed it higher. So that differential where they make their profit has got a bit slimmer.
Yeah, typical example there. There's a lot of charts like this at the moment. They've come down, obviously coming from their low, and they now at higher lows here, and you want to break out above this higher highs. So they have sort of pieced it today, almost there. You see, so they can. But you want to, definitely.
I'm starting to think that gold miners is the play in gold. Because essentially it's a leveraged play on the gold price.
Yeah, absolutely, yeah.
And they've been so weak for so long that. And the gold price is still strong, and we might talk about the US credit rating cut in a minute. But one of the effects is that people are out there seeking safe havens.
Yeah,
and one of those safe havens is gold. Gold, has been very strong this year, which is also unusual because gold should not be strong when your interest rates are rising because gold pays no coupon, bonds do. So I think this period of weakness for gold miners could be coming to an end. And then you could see some serious upside.
Look at that there. Definitely look at the support levels there. In fact, it's really big spike down there, but it bounced up and then hit it there. What was that? 95 pence. Hit it there again. Then it broke down. Then basically, if you've been holding there, put a stop loss in there, get out because it's into a new downtrend. But then higher lows. And then again, it tested that level, 95 pence, couldn't break through. And it needs to break through at 95 pence to get really up there because that's the previous support and previous resistance there. So,
the other interesting thing about this statement is, so this relates to an environmental permit. Environmental permitting is becoming really, really, really difficult. Really difficult. So getting that through. It's no mean feat these days. There's such a focus on ESG, on the environment, and rightly so. The scrutiny on these projects is just becoming greater and greater. So they have to jump through more hoops to get these environmental permits, and when they get them, it's no surprise to see that the price reacts in the way that it does.
Mm-hmm. Yeah. So just finishing off on, in fact, yesterday we had sort of chat about Ondo's final results, and they're powering away like crazy.
They look good.
And the chart on this, it's phenomenal. Look at that. I'll just put it share screen there. There's a wobbly lines of support and resistance there. But what I would say here, right, is like I want to get I want to get the CEO on, Phil Foss, because he's doing very well as a leak detection sort of software there. And look at that. There's always a winner somewhere in the markets. Always, just got to find it. It's hard to find them sometimes. But when you get momentum behind the stock, especially micro small caps, it doesn't matter what the wider macro environment. They're in a world of their own. And you see there. Well, I would say a couple of times the pullbacks here have happened when the RSI has got above 80 pretty much. There's been a couple of pullbacks. You can see here, pull back, but it's not quite there yet. It's just above 70. So maybe some more to go here. But phenomenal rise in that chart. Okay, let's look at some headlines. 3 major lenders have slashed mortgage rates. Of course, mortgages look ahead. So, they will get cheaper over time, so they can start slashing them now, even before tomorrow. But I think if the Bank of England goes with that, it'll help everything. If they go with forecasts of 25 basis points, it'll help everything. What do you make of this Fitch thing? Downgraded. The US government's credit rating has been downgraded following concerns over the state of the country's finances. In June, the government succeeded in lifting the debt ceiling to 31.4 trillion.
Yeah, it doesn't surprise me.
It just gets nuts. That kind of figures are nuts, aren't they?
It really doesn't surprise me that that they've downgraded this rating on a technical basis. It's the US. It is a safe haven in itself. So in that sense, it is quite surprising, and its debt is a safe haven.
Yeah, well, if you can't invest in the US's government debt, who can you invest?
Well, quite. But it is a reflection of the fact that government borrowing in the US, it just keeps rising and rising and rising. This is the thing across all Western economies. We spend beyond our means, and we borrow to plug the gap, and we do it almost year after year after year, almost to the extent that nobody cares about the debt. And I think that's the argument. Nobody cares about the debt.
They don't. I see doom mongers all day on Twitter talking about this is the year the debt will wipe out the entire financial system, and they've been doing that for the last 30, 40, 50 years.
A very long time, yeah.
And I think, and there's there's perma bears on there all the time. And if you took their advice, you'd never make any money because they've always been bearish. And every now and again, you obviously get a clock is right, a stop clock is right twice a day. If you take their advice, then okay, once every 5-10 years, then a big sell off. and that's it. But I mean, I wouldn't pay too much attention to the bears out there because you don't make money doing that. You know, it's like you can get into that sort of rabbit hole. Of, look at this. You know.
I do think there's something in the perma bears warnings, though. You know, I do think
there's something in it.
Yeah, I mean, but how it plays out is what's obviously important. What I think we're seeing really is a sort of bifurcation of the world. So you know, the old West, America and Europe, the UK, and the sort of new world, the BRICS. You know, and I think we are starting to see signs that the BRICS are starting to, you know, rattle their sabers a bit and no longer want to be sort of second best to the sort of US hegemon. And I think that's where it will start to play out, and where the debt might start to become a problem. We see there's all sorts of strange things going on at the moment. You know, I don't know if you've seen what's happening in Niger, where there's been a coup. You know, where they've threatened to, you know, block uranium exports to France and the US. You know, we've seen an Indian rice ban. We're seeing all sorts of stuff going on. Russia has written off all its African debts. You know, we see there is something happening here, and I think we need to pay close attention. And I think if you trace it all the way back, it does relate to the US debt and possibly the end of the American century. But there you go. That's a story for another time.
I know there's always been those that talk to us. Anyway, let's and quickly. Well, that's basically it. It's Deltex. One of the biggest fallers today. Deltex is down 82%. They were suspended for a while because of financing worries, and now they've relisted. Is a plane that how much they raised in the end? Retail offer was like I think let's see. 500,000, but
that's the retail offer.
A million. Million and
a couple of million or thereabouts.
And now they're at 1.6 plus that, so 3 million. I falling knife that. Stay away for a while.
Not one for me.
No, not for me either. Cool. Thanks very much. That's it for taking stock, working lunch, whatever it is, and we'll speak tomorrow. Catch up then. Cheers, John. Bye bye.
See you later. Yeah.
I'm trying to